start. All right, so once again, I want to say good evening, everybody. My name remains Ogunfunle Adetola-Freeman Tanimola, and as you know, I am going to be your coach, and I'm going to be taking you through the things that we have for tonight. All right. I want to believe that we can all see my screen. I want to believe that we can all see my screen. Is that true? Okay. If you can see my screen, can you just drop a comment or something? Let me know that you can see what I'm seeing. All right. Thank you. All right. Beautiful. So we're going to start tonight by taking a quick recap of where we stopped the last time, or the things that we were able to cover the last time. All right. Our last session we were talking about
hearing him now.
Forex trading.
Participants to see the people. These are the participants.
So you cannot be seeing the pictures.
But you'll be, if the person now shares this thing, I will be seeing the person.
Please, I want to adjure us to please ensure that our mics are muted. Please ensure that your mics are muted. God bless us in Jesus' name. Amen. All right. So that said, we're going to start by recapping how far we've gone so far from the last class. All right. So the last class, this was what we looked into for the last class. Sorry about that. Okay, so during the last class, we looked into the basics of Forex trading, what exactly Forex trading is all about. And then we were able to see that it talks about an exchange of currencies or commodities based on perceived values, and then during the course of the week, I had a conversation with, I think that was yesterday or 2 days ago. One of us asked or requested that I go back to some of the comments that I dropped on the group previously during the last training. I'm trying to look for the chat now so that I can see the exact things that were requested that I cover. Okay. All right. So he talked about the big banks. He talked about talking about the different sessions, the different market sessions, and he talked about fundamental analysis. So I think he talked about all of those things. And that's exactly what I'm going to be doing. That's exactly where I'm going to be staying. Okay, so first of all, when I talked about the big banks, I believe we all noticed that there was no mention of central bank there, central bank, whether of Nigeria or of whatever, because these were the banks that I showed us with respect to the big banks, which are Citibank, JP Morgan Bank, UBS Bank, Barclays Bank, Deutsche Bank, and HSBC. These 6 banks are the banks that I was referring to when I talked about the big banks, because these are the banks that engage in the majority of the exchanges that we know as Forex. All right, these banks are the ones that drive the majority of the purchasing power of the movements in the Forex market. All right, and that's why we call them the big banks. Okay, and then talking about I'm sorry about that, but talking about the market sessions. All right, I was talking about the fact that in order for markets to continue running, all right, in order for the market to continue running, the market needs to run like a kind of shift. All right, you know, the way companies run, such that, you know, there's a morning shift, there's probably an afternoon shift or a night shift or something. All right, so the this is how the regular market is segregated into shifts. All right, so we have various people or various market shifts that that order or that direct the direction of the market. Okay, that direct the market, and the reason is because there is a need for the market to be open 24 hours a day, 5 days a week. All right, so because of that, there needs to be a kind of um, overlapping trades. All right, that an overlapping of the sessions. The sessions need to overlap to ensure that the market is consistently open. All right, so although there are 5 sessions in the market, but there are 3 major sessions that should concern you. All right, because those are the sessions that actually afford us the maximum opportunities or the maximum potential for profit. All right, so the majority of the, or let me say, the 4 major sessions in the Forex market, please, once again, let us ensure that our microphones are muted as we join the chat. God bless us in Jesus' name. As you join the session, please ensure that your mic is muted. Thank you. All right, so the 4 major sessions are the Sydney session, the Tokyo session, the London session, and the New York session. All right. However, there are 3 major sessions that should concern you, because those sessions are the sessions that they are the sessions that carry the cocoa. You understand, where the real money is. So those sessions are simply the Asian session, the European session, and the North American session. So we simply talk about Tokyo, London, and New York sessions. All right. And the reason why this is because by the time somebody is waking up in the United States, somebody is actually going to sleep in China or Tokyo or whatever. So there's a need for, as the person that is in the United States is waking up, as the guy in China or Japan is going to sleep, there must be somebody in the United States who is taking over his place instantly. All right. So this system is what ensures that the sessions of the Forex market continues to keep running like that. All right, to keep running like that. So what we now have is, but the majority that we concentrate on is the Tokyo session, the London session, and the New York session, So basically, I'm gonna send us a document that will show us details about this. In case I forget, please, I need someone to remind me just in case I forget. All right, so I'm going to be sending a document that categorically explains all of this better. All right, and another thing is, okay, he talked about fundamental analysis. Well, I wouldn't want us to concentrate on fundamental analysis for the time being. All right, when we get to the point where we start taking practicals, we'll be able to look into fundamental analysis in detail. But for now, I just need us to give me your ears so that we can ride together. All right, and as time goes on and as we continue to eat each one of those junctions, we'll be able to go into these things. All right. So that said, let's go into what we have for today. All right. So what we have for today is the chart environment and chart interpretation. All right, the chart environment and chart interpretation. The chart environment and chart interpretation. Now, one of the major things that you're going to need as a Forex trader is to be able to understand what exactly the Forex chart is telling you. Because your ability to understand the information on the chart is what will determine whether or not you're going to be successful as a trader. All right, that's what will determine whether or not you're going to be successful as a trader. I didn't ask you to close it. All right. Apologies, please. I'm trying to resolve something over here. Okay. Sorry, it's just an alarm. All right. So your ability to be able to understand what exactly the chart is saying to you is what will determine your degree of profitability in the market. All right, is what will determine whether or not you're going to be really profitable in the market. All right, so the key topics for discussion tonight are, first of all, what do the charts really say? What exactly does the chart say to you? What does it tell you? All right, then we'll look at chart types and charting platforms. We'll look at chart types and charting platforms. Although we might not really go into charting platforms, but we'll look at chart types in depth. And then we'll look at how to interpret chart data, and then we'll look at analyzing time frames and then indicators and objects. Although we might not really look into analyzing time frames in detail, as well as indicators and objects. We might not look into those ones in detail yet. But remember, it's a 3-month journey. We don't want to rush anything. We want to ensure that everyone is carried along at a pace that is beneficial to all of them, to all of us, all right? So that said, let's begin with, what do the charts really say? All right? What do the charts really say to us? All right, what do the charts really say? All right, beautiful. So now that we know that as traders, we need to be able to practically and adequately analyze the Forex market. And we know that majority of what the Forex market is going to say to us is going to be said to us through the chart. All right, it's going to be said to us via the chart. So that's why we're going to need to understand how to interpret the chart. All right, so the Forex trading chart is a graphical representation of the relationship between price and time. All right, it's a graphical representation of the relationship between price and time. I'm going to show us that. We're going to see that in the slide as we scroll downwards. All right, so most chart types show the rate of change in price per time. All right, so the rate of change in price per time. However, there are a few exceptions for advanced chart types like the Renko charts, what's it called now? There are different types of charts, all right? There are different types of charts, but one of the major ones that don't really show price and time, it shows only price, is the Renko chart, all right? So that's why I said that most charts will show you the rate of change in price per time, but there are a few exceptions, but those ones are actually for advanced traders, all right? Those ones are for advanced traders. So this graph here represents, it shows us a picture of what exactly the Forex chart looks like, all right? And as we can see, there's an horizontal axis, and then there is a vertical axis, all right? So the horizontal axis represents the exchange rate, all right, which is the price rate, all right? And then the vertical axis shows time successions, So I'm going to try to quickly show us that on a charting platform in real life. All right. Okay. Okay. All right. So as we can see, I believe we can all see my chart. I believe that we can all see what exactly is on my screen right now. That's just my belief. All right. So based on that now, I'm going to draw a box, or let me use this. All right. As we can see, this region, this marked region, all right, you can see this painted region that I just painted now. You see figures like I believe we can see that. You see figures like 1.1767687, 1.5. All right, Mr. Oladapo can see the figures. Who else can see those figures? All right, Miss Grace, thank you so much. So basically, we need to understand first that, as you can see from this corner here, let me annotate. Okay. Okay, beautiful. So as you can see from this corner here, we have EUR USD. All right. Now, basically, what this means is that this is telling you that this chart is a chart of euro against US dollar. All right. If you are following me, can you just type in the comment section that you are following? Let me see that you're following, please. All right, thank you. So you see that this is showing us that it's a chart of euro against the US dollar. And we know that both of them are currencies, all right? We know that the euro is a currency, the US dollar is a currency. So what you have at the corner here is telling you that this chart is a chart of euro to US dollar, all right? So that said, you see that the next thing you are seeing here is 4H. Now, this is TradingView. This is TradingView. It's one of the charting platforms. All right. It's an online charting platform. Although some of you are going to be more familiar with MetaTrader. All right. Some of you are going to be more familiar with MetaTrader, but I use both MetaTrader and TradingView because I love the simplicity of what TradingView of 4H. All right. This particular column here. All right. what you're seeing on that 4H is simply telling you that each one of these guys, all right, whether green or red, let me zoom in so you can see clearer. All right, so it's simply telling you that each one of these guys, all right, like this one, this one, this one, this one, this one, this one, this one. It's simply telling you that each of these candlesticks, all right, simply talks about the fact that each of these candlesticks represents 4 hours, each one. So this one now was formed in 4 hours. This was also formed in 4 hours. So that's what this 4H that is here is telling you. All right. So if I actually don't want to see this on the 4 hours, I can actually come here, click this part, all right, or I can just come here and then select whatever it's called time frame, all right, and then I can come to 1 hour, and then you see that the 4H will change to 1H. All right, you see that the 4H will change to 1H. Oh, yes. All right, so I believe we can see that now. You see now that instead of 4H, what we have here now is 1H, which means that on this chart now, each of these guys, these candlesticks, represents what happened to price in 1 hour. All right. We are still going to come back to this in depth, but for now, I just wanted to show you what we call our analysis, or what exactly we do when we run all of this analysis. So remember, on this part, you have the exchange rate, and then on this part, you have time. All right. So this here is time. All right. And this here is price. All right. And that's why you see that on this axis, you can see 12 o'clock. You can see 19, and then another 12 o'clock. So this 19 is showing you that a new day started here. This was 18th of November. This was 19th of November. This was 28th of November, which was yesterday. All right. Okay. Mr. Oladapo says is lost. Where exactly? Now, before I go into that, let me just quickly say that I'm only showing you this chart there is only one point I'm trying to make. All right. There's only one point I'm trying to make right now, and that's the fact that your chart has a vertical axis that shows you the exchange rate, and then a horizontal axis, and then a horizontal axis that shows time. All right. So what I need you to follow now is just the things that I've drawn on the chart. All right. As you can see, there are 2 arrows. One arrow is showing you price. Yes, I'm sorry about the fact that my screen is responding slower than my voice. I think it's because my system has been working since morning. I had 2 sessions earlier today, and this is like my 3rd session for today. So I'm really sorry about that. I apologize. When after this session, I'm definitely going to find a way to piece the video together to make it smoother for us. So basically, what I need you to follow right now is the fact that there are 2 axes on the chart. One of those axes tells you the exchange rate, or the ratio of the price of one commodity to another. Now, because we are on the Euro USD chart, the exchange rate you are seeing around here, the exchange rate you are seeing here, all right, is simply the exchange rate of €1 to $1. All right, so say for example now, if the chart were around a point here, it would mean that €1, it will mean that €1 is equal to $1.18. All right, if that's if the market was here, all right, if it was at this particular point. The reason is because this plane represents price, all right, and then this area, this lower area here, represents time. All right, I'm going to go back to the slides now because I think it's going to be easier for us to understand it from the slides. All right, so this is what we're saying. This is what we're saying. The horizontal axis represents the exchange rate, while the vertical axis represents, it shows us the time succession. It shows us the space of time within which that price movement occurred. All right, within which that price movement occurred. If you're still with me, can you just make a comment in the groups in the chat session to let me know that you're still here and you can still follow me? I'm awaiting a response, please. Just let me know in the comment section that you're still here, you're following me, and I have not misplaced you. All right, thank you. All right, beautiful. So the chart I showed you initially, there is just one thing I need you to pick up from there, and that's what is here. All right, price rate on the vertical axis, and then time on the horizontal axis. Okay, so this is horizontal. This is the horizontal axis, and then this is vertical. All right. So, Natix, Mr. Natix, have I answered your question now? Do you understand what I'm saying now? So this is vertical, all right, while this is horizontal. Exactly. So, that said, this is what I just need us to understand, all right, that majority of the graphs you need to deal with will only be showing you price rate against time. Can we see the diagrams I drew? All right, let me clear everything. This is the vertical axis, all right? This is vertical axis, and this is horizontal axis, all right? So this one that is pointing, to my left now, all right, or to my right rather. This one pointing to my right is your horizontal axis, whereas this one pointing up is your vertical axis. All right, so what we have is a chart of price rate against time. All right, it's a chart of price rate against time. So, Mr. Natix, do you understand what we are saying now? Please let me know that you understand so that we can move on. All right, thank you. So that brings us back to our chart, or to our to the slides. All right, so the horizontal axis represents the exchange rate, while the vertical axis shows us time succession. All right. Now, this information can, however, be represented in a number of ways. All right. The price against time information can be represented in a number of different ways. All right. So we have the simple line graph, we have the bar chart, and then we have the Japanese candlestick, which are the most popular ones that people actually use. All right, so I'm going to switch to a whiteboard so that I can show you what exactly each one of those talks about. All right, so this is our price, this is our time. All right, so I need you to imagine for a minute. All right, imagine for a minute that you are a trader. All right, you have a product that you sell. You have a product that you sell. And then let's say when, let me mark these areas now. This is 10, 20, 30, 40, 50. I believe we get the gist. So let me just mark it, 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 like that. All right. So, and then we have 5, 10, 15, 20, 25, 30. Pardon the way the drawings are looking, but I believe we all get the gist. So that's what's important. Abinobiso, understanding lo shekoko. So that said, all right. So now, if I'm trying to represent what is happening between price and time, all right, I can draw a normal chart and just say that, okay, this commodity that I'm selling, when 5 minutes after I opened the shop, somebody bought it for $30, or let's say 30 naira. All right. 10 minutes after I opened the shop, I started selling it for, another person was able to buy it for 35 naira. You know, in Nigeria, you cannot really know the actual price of something you want to buy in the market. Because even when they tell you that, Oga, now so price we buy them for, definitely you know that there's a profit margin involved. Okay. So that said, and then 15 minutes after you opened the market, somebody was able to buy for 40 naira. All right. 20 minutes after you opened the market, another person came and bought for 30 naira. All right. And then like that, like that, like that, you're just marking the price at which they bought from you. So now, if you do that, you can simply connect all of these points, all right, with a line, and then you have your graph. Okay? How many of us can see the graph that I just drew? And you understand how exactly we got that graph? If you can see the graph and you know exactly how we were able to come up with that graph, please just drop a comment in the chat session. Let me see. I'm awaiting our responses, please. All right, Mr. Dapo can understand and he can see that. Okay, who else can see and understand how we were able to come up with this chart now? Who else? Who else? Who else? All right. Mr. Howell Michael can also see and understand. All right, beautiful. I'm excited. Who else? Who else? Who else? All right, Mr. Olashubulumi. Thank you. All right, so that said, so basically you can see that what we end up with is just like a normal straight line graph. All right, it's like a normal straight line graph. So let's go back to our slide, and you would see that what we have here, this is a chart of Euro USD. All right, as you can see, Euro USD chart represented with lines. All right, so this Euro USD chart now, you can see that it's just normal line. It's like a normal graph. All right, you can see that clearly. It's like a normal graph. It has no, it has almost no, in fact, it has no addition. It's just joining from one point to another. All right, that's just what this chart is showing you. All right, but then we now have another chart called the bar chart. All right, so this same thing that was represented here, okay, this same thing that was represented on this chart is the same thing that is represented on this chart. It's the same information that is represented on this chart, but in a different way entirely, in a different manner entirely. All right, can we see the new chart that I'm showing us right now? Let me try to enlarge. Can we see the kind of things that can we see the kind of drawings that we have on the chart now? All right, if you can see, just let me know in the chat session. My eyes are on the chart right now. If you can see this chart and you understand it, this new one that I'm showing you on the screen, if you can see it and you understand it, let me know. If you can see it and it is looking like gymnastics, let me know. If you can see it and it's looking like complete jargons, also let me know in the chat session, please. I'm waiting to hear our feedback. All right, I'm waiting. This new chart that is on my screen right now, if you can see it, let me know if you understand what it is looking like or not. If it's looking like Kung Fu, if it's looking like gymnastics, let me know. All right, Miss Grace, thank you for your honesty. You can see it though, but you don't really get it. All right, you will get it by the time I'm done explaining what it is telling us. All right, who else can see but doesn't understand what it's representing or what it's showing? All right, so virtually none of us knows how to interpret what we're seeing on the chart now. All right, and that's why we're having this session, because this session will teach you how exactly to interpret what you're seeing right now. All right, so let's quickly go back to the whiteboard. So all right, so let's come back here. All right, oh, let me, this drawing is too rough. Let me draw a new one. All right, so we remember that for the first chart we drew, we were only marking points based on the selling price. All right, we're only marking points based on what price the negotiation was concluded. All right, So say for example, somebody came and bought for 20 naira, we marked it. Somebody bought for 30 naira, we marked it. Somebody bought for 50 naira, we marked it. Somebody bought for 25 naira, we marked it. Somebody bought for 75 naira, we marked it. All right. So all we are concerned about was how much did these people end up paying? That's all we are concerned about. At what price was the negotiation concluded? That's all we are concerned about in the first type of chart, all right, which is the line graph. Okay, in this line graph, we can see that the main thing is just about, okay, how much did I sell it for? Okay, join it to this, join it to this, join it to this, join it to this, and then we have a line graph, all right? But then we now want to look at the bar chart, all right? Pardon my writing. I'm trying as hard as I can to write with a mouse, which is not very convenient for me. But so now, unlike the line graph where we only concerned ourselves with the closing price of the negotiation, all right, the bar chart, on the contrary, will tell you how exactly the negotiation went. All right. So say for example, when I started the sales, all right, I told the person, okay, this thing is 70 naira. The person asked me, you know, the normal way now, Nigerians will ask you, Jale enko, so how much is the last price? All right. And then I told the person that the last price is 50 naira. Okay. So the person says, no, madam, or I'll pay 30 naira. All right. But then I say, no. The least I can do it for is 45 naira. All right. And then when I say 45 naira, the person agrees to buy it for 45 naira. Okay. The person agrees and pays 45 naira for that commodity. All right. So what the bar chart will show you, you know, the line graph will only show you this 45 because it has no business with all of these other figures. All right. But what the bar chart will show you on the contrary is that what was the highest price that we were able to negotiate the amount, the commodity to? $70, 70 naira. So the bar chart will mark it 70 naira. All right. What was the lowest price we were able to negotiate to? 30 naira. All right. We'll mark it. At what price did I open the sale? What was the first price that I presented, that I proposed to the buyer? All right. Which is 50 naira. You will mark it. All right. And then at what price did the person end up buying the product? We see 45 naira. All right. So what will the bar chart do? The bar chart will look at it. What was the first price that I presented to the person? It will draw a line here. All right. What was the price at which the person concluded the transaction? 45 naira. Draw another line here. All right. And then connect between the highest and the lowest price. All right. So at the end of the day, the bar chart will look somewhat like this, where this is the highest price, this is the lowest price, this is the closing price, this is the opening price. All right. The opening price describes how much the negotiation started from. All right. So a bar chart always has two hands. One is always pointing to the past. All right. And the other one is always pointing to the future. So if you understand what I've said so far, if you understood what I've explained so far, please let me know in the chat session. Please get me water. Thank you. Okay, Mr. Oladapo, thank you. Who else understands what I've explained so far? Okay, Miss Grace, thank you. Are they the only two people that understand? I'm going to be doing a giveaway for those that understand, actually. I'm going to pick just one person at random among all of us that understand and just give them a giveaway. All right, Mr. Natix, you understood. Thank you. All right, so now the bar chart operates like a marathon. All right, you know, if you've, or like a relay race rather. Mr. Awo Michael, thank you. I can see your comment. So this is a, consider that this is a relay race runner, all right? And then this is his colleague, all right? This is debating. So you see that this one is passing the baton to the right, all right? But this new guy is receiving the baton with his left hand or to the left, all right? So, and when he wants to pass over the baton to, he will pass it to the right, all right? So that's why you see that the bar chart has hands on both sides, all right? This hand is receiving from either the previous candle, either the previous or the past. This one is receiving from the past, all right? And then this arm is sending the conclusion of our negotiation, is imposing it into the future. All right? Such that, let me quickly erase this. Such that the next bar chart that will be formed, where this one ended, is going to be the start of that next bar chart. All right? Because like I said, it's a relay race. This one is handing over to this one. All right? So where this ended is where this is going to start from. All right? And then end on another note too. All right? So I want to believe that we understood that. So let me quickly go back to our slides. I'm sorry this class is taking so long. All right? I'm really sorry that this class is taking so long. So long. All right? I'm really sorry about that. Okay. That's not where I should be. That's not where I should be. All right. So that's why, okay, we'll still go back there. And then this is Euro USD chart represented with bar charts, all right? And then we have Euro USD chart represented with candlesticks, all right? So this one now is the candlestick representation. We'll look at that too. But before we look at that, let me quickly show you this. So this is the anatomy of a bar chart or of a bar, all right? Because a bar chart consists of several bars, all right? So this is what each bar represents, all right? And as you can see, I believe you can see what I explained. This is the opening price, which is the hand that is pointed to the past, all right? And then this is the close price, which is the hand that is pointed to the future. This is the high, and this is the low, all right? And then you see that the next candle that is receiving from it is using the close price of this one as its own open price, all right? and then it's receiving from the past and transferring to the future. All right. So if you understand the concept of bar charts now, if you understand the concept behind bar charts now, please and please kindly drop a comment in the chat section so that I know that I'm doing a good job. All right, thank you, Mr. Natix. Thank you so much. I would like it if you put it like, "Oi, you are doing well," and you know that will ginger me more. So if you know how to type it, you can just help me. So you can just type, "Oi, you are doing well." Thank you, thank you. It's a Fanta something. See, Mr. Natix, you are dashing me Fanta at this time of the night. You want to give me pot belly by force. Thank you so much. All right, so now that we understand the concept behind bar charts, all right, we can now begin to move on to the next one. All right, so I told us that Miss Grace, thank you so much. So we started by looking at line charts, all right, and then I told us that there is also something called bar charts, all right, and then we've looked at bar charts now and we understand what each of those bars represent. So now we're going to go to the next type of chart representation. All right. We're going to move on to the next type of chart representation, which is simply candlesticks. All right. So the truth is, majority of what you will use throughout your trading career is going to actually be candlesticks. Most of what you will be trading will actually, to a very large extent, be candlesticks. All right, this is mostly what you'll be trading. So having said that, let's quickly look at the anatomy of a candlestick. So I'm going to quickly run away from here and go to the whiteboard. All right, so we've seen how that a bar chart has a hand to the past. All right, and then we have the eye to the low connected together by a straight line, and then this is the close price. All right, so what bar charts do is that if the close price is lower than the opening price, all right, this is the close, this is the open, this is the high, all right, and this is the low. Okay, so whenever the close price is lower than the open price, whenever the close price is lower than the open price, it means that price did what? Dropped. All right, so most times bar charts will give it a different color, like say for example color red. All right, and then when you have a bar chart where the opening price, or the close price rather, is higher than the open price, all right, it means that price went up. All right, so the bar chart will most likely use color green. You can actually change the colors, all right, but these are some of the default colors that come with it. Okay, so now, because of the difficulty as regards trading something like this, okay, if not because of the, as a result of the difficulty, you know, this now is not graphically appealing. It's not appealing to the eyes. All right, it's not romantic enough for a trader. It's not captivating. All right, so the Japanese guys, they are the ones that came up with the pattern of candlesticks and using candlesticks to represent price information. All right, so basically what they did to convert it to candlesticks is that you still remember that this is our opening price now, Abi. This is our opening price. They joined it to the close price, drew a rectangle in between, and then gave this area a color. All right. The open is still the open. The close is still the close. All right. But this area now is now given a solid figure. It's made a solid frame. It's made a solid figure. All right. And the color is still red because to tell us, it's still red so that we can know that the close price is lower than the open price. All right. And then they do the same thing for this. Okay. Fill it up with color. All right. Fill it up, fill it up, fill it up, fill it up. Shade, 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 shade. Don't mind me. It's been long since I used crayon, so my shading is poor. But thank God nobody is giving me scores for this, so I'm free to shade as much as I like or as I can. All right. So, and the color for this too is also still green to tell us that the closing price is higher than the opening price. All right. To tell us that the closing price is still maintained at a higher position compared to the opening price. All right. So, on that note, we now have candlesticks looking like this. This is what a candlestick looks like. All right. So the color is what will tell you whether it is a bullish candlestick or a bearish candlestick. All right. No big grammar I talk. These are some of the terms that are used by professional traders. All right. These are some of our lingua. I was supposed to send a Forex dictionary to the Telegram channel, but I don't know. I'm just remembering now because nobody reminded me, and I mentioned that in the last class. So now that I'm remembering, I'm reminding myself. So if you people don't remind me, it means you really don't need the dictionary. So we will continue the class without giving you the dictionary. All right. So it is the color of the candle that will tell you whether the candle is a bullish candle or a bearish candle. A bullish candle simply bullish, anything bullish simply talks about going up. All right. And anything bearish talks about coming down. All right. So basically, this is what a candlestick looks like. All right. This area is called a wick. All right, like your normal candle that you used to read when you go for night class or when you want to burn your hair for ladies that make attachment. Candle. There's a wick, there's a body made of wax, and then so this lower part too is called a wick. All right. So, and then this becomes our candle stick. All right. So I need to see our comments in the chat section if you understand what candlesticks are about now. If you understand what I've said so far, kindly drop a comment in the chat section. Let me know that you got that. Mr. Natix, thank you so much. You are also doing very well. All right, so who else understands? Okay, Mr. Oladapo, so far so good. Mr. Sheon Dada, you got it. This is like the first time Mr. Sheon is talking this night too. If not because I don't have physical, I'm not physically close to you now, I would have dashed you one bread. I'll just dash you like 200 naira or 300 naira bread and say thank you for talking this night. All right, so Miss Grace, okay, thank you. All right, so that's basically what the candlesticks are about. All right, so the candlestick simply just tells you the open, the close, the high, and the low. All right, per time. Remember, we are dealing with price against time. All right, so each of the candlesticks or each of the bars on the chart or each of the points on the line chart, each one of them represents a position in time. All right, each one of them represents a position in time. And that's why it's important that we know that, so that if you are on, for example, now if you are on the 1 hour time frame, we are still going to look into time frames. All right. But for example, if you're on the 1 hour time frame, okay, Mr. Natix, which of the statements do you want me to repeat? Just give me a clue, give me a hint so that I know which part. You know, I talk a lot. Okay, so each point on the line chart, each candlestick on the candlestick chart, and each bar on the bar chart, each one of them represents price action. All right, each one of them tells you what is happening to price within a particular time frame. All right, within a particular time frame. Within a particular time frame. So if you're on the 1 hour time frame, all right, it means that each point on the line chart, all right, or each bar on the bar chart, or each candle on the candlestick chart is telling you what happened to price, all right, what happened to price over the last 1 hour. All right, if you're on the 1 hour time frame, we are still going to come to time frames. I want us to take it one step at a time, you understand? Because person will wear leggings, no, they come out the 2 legs at once. Are we together? So that's a takeaway proverb for those of you that like proverbs. So you understand. Person will wear leggings, no, they come out in 2 legs at the same time, or else he go fall down. So you understand. So we're going to be taking it one step at a time so that we can have a smooth flow. All right, we can have a gradual progression in our classes, and then with time we can start looking into higher difficulties and higher difficulties and higher difficulties, so that at the end of the day you guys will emerge better traders, in fact professional traders to the core. All right, so that said, let me quickly rush back to my okay, Mr. Oladapo said you can remove both legs at once if you are sitting down, but I still say it is a big lie. One leg will come out first before the second one. Shey una understand? Out of the 2 legs, one leg must carry first position. That's what I'm saying. But if you are sitting down, you may not fall down, but we know at last, one leg will come out first. Mr. Natix, I will not leave you, don't worry. I will not leave you. I will not leave you. I'm still very much here. I'm still very much here. When it's time to drop lines now, when you people have already started trading or analyzing the market well, shey you understand, I'll be giving you some very powerful don't leave me things. Shey you understand? But for the meantime, let's come back to our chart. All right. So you can see this is the anatomy of the candlesticks. All right. This is the anatomy of candlesticks. This is the anatomy of candlesticks. And then you can see that we have the high. The reason why this close is above here, who can tell me the reason why we have our close price here and our open price here, whereas on this other one, our close price is here and our open price is here? What does that tell us? Let's start with this candle. Let's start with this particular candle here. Why is the close price above the open price? Who can tell us? Who can tell us? Who wants to tell us in the chat session? Why is the close price above the open price? I'm waiting. Maybe this is what I will even use to do to give the goody I want to give away. Okay, Mr. Sheldon Dada, because price went up. Mr. Natix, because it is bullish. Mr. Oladapo, price went up, bullish. All of you, clap for yourself. If you are close to a place where they sell soft drink, collect 1 Zobo in my name. If you collect anything more than Zobo, you are on your own. But if you are close to where they sell any drinks, collect 1 Zobo in my name. I will pay on your behalf. You can clap for yourself. Feel free, clap for yourself. Scatter ground. Hallelujah. God bless you in Jesus' name. And then for the other candle, it simply means that price came down. All right. And what's another name for a scenario where price drops? What else do we say happens to price? How do we describe price? If price beautiful, Mr. Natix, bearish, bearish. Okay, Mr. Dapo, bearish, bearish, Mr. Michael, bearish, Miss Grace. In fact, you people are making my head swell. Add something to your Zobo. You can take one donut, one free donut. Or in fact, donut is small. Take one meat pie in my name. Tell them to message me. I'll send them my account number. All right. So thank you so much for following this far. I'm really impressed with our progress so far. All right. I'm really fascinated. Mr. Natixi. So you are in Ilorin. Please. So item 7 with chicken is now 650. It's now 650. But let's have a deal. If you are still in Ilorin by December, the second Sunday in December, if you are still in Ilorin by the second Sunday in December, I can promise you your item 7 with chicken. If you are still in Ilorin, beautiful. I'm in Lagos at the moment, so when I'm back from Lagos, we can see the second Sunday in December. Remind me, you have my Instagram, my Telegram number, so message me. Item 7 with chicken is a done deal. Thank you. All right, so now we come to measures of movement. You know, we've looked at the fact that, okay, price can either go up or come down. All right. But because we are actually not, let me come to my whiteboard. Or in fact, Mr. Natix, I don't want to keep you waiting. Item 7, a plate of item 7 is 650 right now. All right. So after this session, send me your account number. I'll wire you 700 naira so you can buy your item 7 tomorrow. God bless you in Jesus' name as you obey. The Lord bless you. All right. So that said, we know that on a normal day, Mr. Michael is clapping for me. Don't clap for me. Just say, "Oh, you are doing well. I will be okay. My body will calm down." All right. So, remember when we started, I said that the chart really does not represent price per se. On the contrary, what it represents is price rate or exchange rate. What it represents is exchange rate. All right. And so that means that the points on this chart for a chart that is marked Euro USD, all right, for a chart like this that is marked Euro USD, it means that we cannot put the price in euros, all right, or in USD, all right, because both of them are currencies, all right. So what we do is that we have on this price axis now, what we have there is actually an exchange rate. So we calculate 1 euro. It's like saying 1 euro divided by 1 US dollar. All right. So that's what we have on this price pane. Do we understand that? That's what we have on this price pane. Because if we say that this chart, because it's Euro USD, we cannot say that the price, we can't graduate the price in euros, all right, because it's a chart that is showing us the exchange rate of two different commodities. All right, there are two commodities involved here. And then we have we can't put it in USD too because there are two commodities involved. All right, so that's why we have things like 1.18000, all right, on the chart, because it's simply telling us that €1 is equivalent to 1.18 US dollar at that point in time, all right, at that point in time. If you understand what I've said, what I just said just now, can you just let me know in the chat section so that I know whether to come again or we can move on? All right, I'll come again. Mr. Natix needs me to come again, so we don't leave anyone behind. So I said, because this is a chart of euro to US dollar, all right, this our price axis. It will be unfair to call it. Let me ask you a question. Miss Grace, you will be the one to answer this question. So imagine that you and your friend, all right, the two of you contributed money to buy, what can I say you people contributed to buy? Oh, what's that thing that women can share? Okay, let's say you and someone contributed to pay a house rent, all right? Both of you contributed 50-50 to pay the rent, okay? So Miss Grace, who owns the house? Or if anybody wants to answer that question too, they are free to attempt it. Okay, beautiful. Both of you, all right? Both of you. So how would you feel if the person goes about to tell everybody that they are the owner of the house, not you? Like, it's only me that owns this house, so it's only me. And then the person tells everyone that you are only squatting with them. How would you feel? Okay, Mr. Natix, that your high alone is enough an answer. Beautiful. Because you will feel offended that why would you say that this thing is yours? Because it belongs to the two of us equally. All right? It belongs to the two of us equally. It belongs to the two of us equally. So that said, because this is a chart of euro to US dollar, all right, it will be unfair to say that to graduate the price. Mr. Natix, you should fear now. Who no fear women, no one live long. That's just by the way. Please, don't say please, women are to be taken care of. Not all women are like that. So, what I'm trying to say is this. Since there's a chart of two different commodities, all right, if you say that the price is graduated in euro, all right, it means that you are disregarding the US dollar. I beg, forgive the person. Na childishness. Ọmọdé ló ṣe ẹni bínú ni. So if you say that this chart is a chart of euro, is a euro chart, all right, it means that you have just disregarded the US dollar, all right? And if you say that this is a chart of the US dollar, it means you have just embarrassed the euro, all right? So because of that, these charts are usually graduated in a ratio, all right? It's usually done as a calculated ratio, all right? And that's why you have fractions, all right? That's why you have decimals, rather, all right? That's why you have the price marked out as decimals. So for example, Euro USD now simply says that if you take the price of euro per time to be X and the price of US dollar per time to be Y, all right? So Euro USD will be X over Y, which is why it is represented like this, Euro slash USD. All right? Beautiful. So that said, if you understand what I've explained so far, please let me know in the comment section, please. If you understand what I've said so far, please indicate in the comment section. All right, thank you. Who else understands what I've explained so far? All right, Miss Grace, Mr. Michael. All right, beautiful. I'm really excited to see that we are all right. Mr. Sheon Dada, do you have a question or you just want to say something? Please, if you have a question, please feel free to type it in the comment section. Okay, beautiful. Thank you so much. Thank you so much. All right, so that said, all right, we need to be able to know the unit of measurement, all right? Because say for example now, if it was in naira, all right, if something went from 10 naira to 50 naira, all right, you can easily say, okay, 50 minus 10, all right, and then you say the difference is 40 naira, all right, where naira here is simply the unit of the measurement. Do we understand? Naira here is the unit of measuring this movement, all right? We use naira as the unit of measuring this movement, okay? But now, because we are having decimals, all right? We are having decimals in our Forex chart, all right? We're having these figures without any particular unit. Because I showed you, you can't say it's euro because that would be insubordination, and you can't say it's USD because that would be backbiting and betrayal. All right. So, how then do we measure movements? How then do we measure the differences between where we used to be and where we are now? So, there are two major units of measurement. Remember here, the naira was the unit for measuring how much movement we have enjoyed. All right. We moved from 10 to 50 naira. All right. And then the unit for that measurement was naira. All right. So the same way, if we move from 1.1800 to 1.1920, all right, 1.1920, there needs to be a unit for measuring this. All right, because here now we have 0.012. All right, 0.012, but it doesn't have a unit. All right, it doesn't have a unit. So what we need to do now is we need a unit that will be able to tell us this movement, this 0.012 movement, what exactly is the unit. All right, so that's why we have points. All right, and pips, where pips is simply short for percentage in points. All right, percentage in points. That's what PIPS represents. All right. So we have points, we have pips. All right. So although most people only deal with this, most people only know pips. All right. Most people only know pips. You know, it's like in your primary school, they told you about millimeters, they told you about centimeters. All right. But when you think about length, you think more about centimeters than millimeters. All right. You think more about centimeters than millimeters, at least if you are someone like me. Okay. So that's just how it works. All right. So um, we deal more, majority of traders talk more in pips than in points. All right. So we're going to go back to the slides now and then see what they have in store for us. All right, so measures of movement. All right, so we have, as you can see, this is this is 1.13215. All right, 1.13215. And then if you remember what they taught us when they were teaching us place value, all right, I know some of us might have forgotten, but no matter if you have forgotten, you shall will still remember hundreds, tens, units. Abina, please, if you cannot remember 100 tens units, let me know in the comment section so that we can organize your own special class. Maybe I will have to invite you to redemption camp to come and have your own class. So if you cannot remember 100 tens units, let me know so we can organize your own personal session in redemption camp. All right. So as it is now that nobody is coming up, I believe that everybody still remembers their 100 tens units. All right. So beautiful. So that's the same thing that applies when we start talking about measures of movement. All right. Measures of movement. Now, for commodities that have 5 decimal places, for commodities that have 5 decimal places, all right, the second to the last figure is usually your pip. Let me show us that quickly on the whiteboard. So this is 3 pipettes or pipettes, sorry. This is 3 pipettes, all right, or 0.3 pips. Or 0.3 pips, all right. This here is 8 pips, all right. This is 20 pips, all right. This is 300 pips, okay. That's 300 pips. So as you can see, okay, so it's like sorry. So it's more like the way you do 100 tens units, all right, where this one becomes the actual decimal. So this will be 1,000 and then 10,000. If you understand what I've shown us so far, please let me know in the comment section quickly. All right, thank you, Mr. Natix. All right, Mr. Dapo, thank you. Who else understands how far we've come? Who else has been following? All right, Miss Grace, thank you so much. Okay, Mr. Sheung, thank you so much. Thank you so much. I'm doing well. Mr. Michael, thank you. Thank you. Thank you. All right, so the pips now becomes our measure. All right, it becomes what we use to measure the movement of markets. All right, it becomes what we use as a means of measuring market movements. All right, so let's go back to our slide quickly. We're actually rounding up the session already, as you can see. All right, so now, how do you make profitable analysis? And as you can see, this is technical analysis with candles, based on candlesticks, all right? And then we want to look at how do you make profitable analysis, okay? So let me start by saying this is going to be the main thing that we'll be doing in the next class. Our next class is going to be a 95% practical class, because what we'll be doing will be for us to look at the charts and actually interpret the chart. And not only to interpret the chart, but we will begin to analyze the charts. All right, that's what we start doing from next week. So all of this that we're doing is to just establish our foundation so that we can know exactly what trading Forex entails, so that as we begin to progress, all right, it becomes easier for us to be able to follow the directions of the market. All right. So I want to believe that right now, if any one of you comes across a Forex chart, if any one of you comes across a Forex chart, I want to believe that right now we will be able to interpret what it is saying. If you know that is true, please type a comment in the chat. Please type in the comment section. Let me see. If right now, if you see any chart, any Forex related chart, you can be able to know what it is that it is saying. Let me know in the comment section. Mr. Natix, thank you. Who else? Who else? Who else? I'm waiting. Sister Grace, with God, everything is possible. Sure, you will cuckoo come and go and learn your own Forex from Jamaica. All right, Mr. Oladapo, beautiful. The fact that you would have an idea is a starting point. All right, that's why I don't want to pour out everything at once, so that it doesn't all become discombobulated in your memory, in your database. All right, I want us to be able to take it nugget by nugget, so that in little time now you'll be able to start. It's like trying to get a child to run. You don't start by taking the child to the marathon tracks. All right, you start by allowing them crawl, and then allowing them start to walk. All right, before they can now start to run. All right, so that's basically what we're trying to do. We're trying to take it step by step. All right, Mr. Michael, as a beginner, yes, we are all beginners here. Even me myself, I'm just beginning to begin with you. Sure, you understand? So that's my first don't leave me for tonight. I told you that I would do don't leave me. So better than before the lesson started. Beautiful, Mr. Sheung Dada. Beautiful, beautiful. All right. So because it's your understanding and ability to interpret this thing that will determine that would help all of us to be able to see candlesticks and analyze them, because majority of what we'll be doing is technical analysis, and that means that we are going to need to be able to interpret the candlesticks and know what exactly it is that they are saying to us. All right. and be able to know what exactly it is that the candlesticks are saying to us. So I would like to round up the class here. I don't know, but I would sincerely love to wrap up the class here so that our next class we can start from the science of market analysis. And in the language of one of my very dear friendly musicians that sang that science students, we know that science students are not science students by mouth, they are science students by practical. Are we together? You cannot be a science student without doing practicals. So next week when we look at the science of market analysis, the bulk of what we will be doing is actual analysis. We'll be doing the practical, the way the practicality is a practical something. All right, that's what we'll be doing throughout the next session. All right, so if you've learned anything tonight, if you have a comment, if you have a remark, a question, whatever, my the chat session is open. Drop it, bombard me. If you want to tell me I'm doing well, feel free, feel free, feel free. I can decide to buy you gala when next I'm inside Hold Up in Lagos here. Just let me know if you have questions or whatever it is. Let me know so that we can wrap up the lesson for tonight. Miss Grace, thank you so much. Mr. Netix, thank you so much. Don't forget to send your account number. All right, Mr. Shion Dada, thank you so much. Okay, Mr. Natix, you have a question? All right, I'm with you. Please drop your question. All right, thank you, Mr. Oladapo. Thank you so much. Mr. Natix, you can ask your question. I'm with you. I'm with you, please. Okay, when I was explaining Euro USD, okay, it was a random figure. It was a random figure. I just generated the figure in my head. It was a random figure. It was a random figure. All right. So is that the only question we have for tonight? Does anyone else have any other question? Does anybody else have any other question? Does anyone else have any other question? Oh, yes, I'm sorry about that. I actually wasn't intending to share my screen for long, but there's a way to do that. Let me show you how I usually like to share my screen. Mr. Oladapo, please, I need you to follow, I need you to see what I'm about to do now. Is it easy for you to see the mouse now? Can you figure out the mouse now? Is it easier for you to see the mouse now? If it's easier for you to locate the mouse now, let me know, please. Exactly. So that's actually how I show things. But the reason why that happened was because I wasn't really conscious. I just wanted to show something quickly and then get out of the chat. Oh, Miss Grace Okpeyemi, is the trading only between Euro USD? No, no, it's not only between Euro USD. But the reason why I used Euro USD tonight is because I didn't want to use so many examples, all right? So I wanted us to stick with just one commodity so that we'll not start getting distracted by all of the names and everything. Sure, you understand? So that's why I just wanted us to make it pinpoint accurate. We take just one commodity and then we base all our examples on that one commodity. Do you get that now? Miss Grace, do you understand what I said just now? All right, thank you so much. So do we have any other questions, please? Do we have any other questions? Are there any other questions? Please, I'm waiting. I'm waiting. Any other questions? Is anyone that has anything to say that they've not said? Yes, yes, yes. As we progress, you'll begin to understand better how to use the PEEP. Yes, definitely, 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 definitely. Because that's where the money is. That's where the money is. Your profit in the market is either measured, is usually measured in pips, all right? So it is the pips that you convert to a currency value. The pip is converted to a currency value to determine how much profit you are making, all right? So profit or loss is usually indicated or shown as pips, all right? It's usually shown as pips. So it is the pips that is now usually converted to your default currency value, the currency of your account, all right? So that's just it. So the PIP is actually something that you are going to relate with. You will play with it, you will sleep with it, you will go to bed with it. In fact, you will go to bedroom with it. It will fool your head. PIP will fool your head. So we will take it one step at a time. Does anybody else have any other thing to say? Okay. Does anybody else have anything to say? Because me, I have something to say that I've not said since all these days. So, and I want to be the last person to say it so that immediately after I say it now, everybody will go and sleep. Okay, let me shoot you. All right. So consider this a public service announcement. It's a free announcement. Okay. So next week, Friday is my birthday. And if you don't wish me happy birthday next class, if you don't wish me happy birthday next class, I will make sure that I will beat all of you. I will send Angel Lookman to come and beat all of you. Yes, sir, Mr. Shion, that next week, Friday is 27th. That's my birthday. Miss Grace, interesting class so far. Thank you. Thank you. Let me sing for you, Sister Grace. Sister, I thank you. You do well, I thank you. You don't make the class better, eh? So we end there. Thank you very much. All right, so Mr. Awu Michael, I like this, your emoji. He's a smiling guy. Thank you. All right, so on this note, I want to say thank you so much to everybody. You guys are, Mr. Oladapo, please eat, oh, please eat, oh, eat, oh, eat, oh. I don't have rice for you people. I don't have rice for you. No cake, safe. Me, myself, I'm not eating cake or rice. Because I'm carrying everything to the motherless baby's home. Okay, Mr. Natics is giving item 7 to everybody. Thank you so much. We appreciate you. We appreciate you. Oh, no, you are fantastic. Thank you. See, strong man that is pretending like a small boy. Come on, you can do it, Joe. All right, so I want to say thank you so much, everybody. Really, it's been an amazing experience. I want to appreciate you. I will bring your special package when we see. So if you can see me when I'm being lifted up, you will get your special package in Jesus' name. So I want to say thank you so much. You guys have made the class amazing. You've made it fabulous because I've had people that I have taught, and every time they are always making the class boring because their eyes is always thinking about just the money, money, money. Even when I try to make them laugh, they will not laugh because suffering has made them very boring people. So, but I want to thank you people because you guys are that you have made this class amazing and fantastic for me. So I want to say thank you so much. And I'll say from the bottom of my heart, God bless you guys. I really appreciate your presence here tonight. So that said, Mr. Netics, please send. Yes, you are doing well. You guys are doing very, very well. Very, very well. So, Mr. Natix, please don't forget to send me your account details in my inbox tonight. And then Miss Grace and Mr. Oladapo, you just won yourselves something. I won't say what it is now, but you just won yourselves something. During the week, I'm going to communicate to you what exactly it is so that you can thank me as at when due. So once again, I want to say thank you so much, guys. You guys are fantastic. You're amazing, and God bless you. So we can and you people did not clap for me today because the class there was no break in the middle. Network did not go. My laptop did not misbehave. Everything went smoothly, and you people still did not say, well done. No. You not congratulate me. It's okay. I'll cash you people next week. Yeah, I will cash all of you next week. Laptop, oh, thank you. All right. Thank you so much, guys. See you all once again next week. So during the week, I'm going to be dropping the Forex dictionary. Please, guys, remind me during the week. I'm going to be dropping the Forex dictionary. So God bless you all. Thank you so much, and I love you guys so much. You guys have made it interesting so far, and I look forward to us making money together in the market and showing all the Oyibo, all the pepper that Nigeria is showing us. Abi, won't you like to show the Oyibo the pepper that Nigeria is showing you? Oh, yes, yes, yes. Mr. Natix, thanks for reminding me. The Forex dictionary and file to explain the different sessions. I will definitely send that. I will definitely send that across. I'll definitely send that across. All right. So thank you so much. Thank you so much. And we wrap it up here. God bless you guys. Have a fantastic rest of the weekend and an amazing service tomorrow. Miss Grace, you raised your hand. Thank you. You have dropped that hand. Thank you. God bless you guys. Have a good night. Bye-bye.